Following breaking news on Wall Street with stocks tumbling right now, all three indices showing sharp decline.
Trump has never been shy about criticizing Jerome Powell. At one point, he even hinted at firing the Federal Reserve Chair, a move that would have sent shockwaves through the global economy. But now, with the stock market climbing and economic optimism rising, Trump is suddenly changing his tune. Why the sudden shift? And what does it mean for America's financial future? Let's break it down. Donald Trump's rocky relationship with the Federal Reserve, especially its chair, Jerome Powell, has been one of the most dramatic financial storylines in recent political history. From the moment Powell was appointed in 2018, tensions between the two began simmering. Trump had expected loyalty, but Powell had a different role to play, maintaining the independence and credibility of America's central bank. As the economy slowed in 2019, Trump frequently took to Twitter and press conferences to blast Powell for not slashing interest rates aggressively enough. At one point, he publicly questioned who was a bigger enemy, Powell or China's President Xi. These weren't just offhanded remarks. They signaled real pressure on the Fed, which historically avoids direct political interference. Behind closed doors, it got even more intense. Reports emerged that Trump explored the legality of firing Powell or demoting him to a less influential position, an idea virtually unheard of in modern economic governance. The Federal Reserve Chair is typically allowed to operate independently, precisely to avoid short-term political pressures from the White House. Despite the chaos, Powell stayed the course. He continued adjusting interest rates based on data, not presidential tweets. His calm demeanor during press conferences contrasted sharply with Trump's fiery accusations. While Powell faced criticism from both political sides at times, he maintained the Fed's mission: keep inflation stable, support employment, and guard against financial instability. As Trump's presidency progressed, the Fed's decisions did sometimes align with his goals, especially when rate cuts came during the trade war with China. But the personal tension remained. The idea of a president threatening to remove a Fed chair over policy disagreements shook economists, legal scholars, and Wall Street. Now, fast forward to 2025, Trump is no longer threatening to fire Powell. Instead, he's playing nice, or at least quieter. But to understand this new stance, we have to remember where it all began, with a battle over control, narrative, and economic power. While Trump's shift in tone toward Jerome Powell raised eyebrows, it coincides with something he values deeply: soaring stock markets. The S&P 500 and NASDAQ have recently hit new highs, triggering optimism across financial circles. But what's really driving this rally? First, inflation appears to be cooling faster than expected. After months of elevated prices, recent data suggests that consumer prices are stabilizing. This gives the Federal Reserve room to pause or even cut interest rates, exactly the kind of move markets love. Lower borrowing costs make it easier for businesses to grow and consumers to spend, boosting corporate profits and investor confidence. Second, tech stocks are leading the charge. Giants like Apple, Nvidia, and Microsoft have posted strong earnings thanks to continued growth in artificial intelligence and cloud computing. These sectors are often seen as the future of the U.S. economy, and investors are pouring money in. Another key factor: unemployment remains low. The labor market is still strong, which signals resilience in the economy. Despite global tensions and fears of a potential slowdown, the U.S. economy continues to beat expectations, creating a kind of soft landing scenario that investors hoped for. Geopolitically, there's been a temporary easing of trade tensions with China, along with stabilizing energy prices. That's reducing uncertainty, which always helps markets recover. Add in a calmer political environment for now, at least on the economic front, and you get the recipe for a strong surge. And then there's the Trump effect. Historically, Trump ties his political strength to economic performance. A rising stock market plays into his narrative that under his influence, the American economy flourishes. So as long as Wall Street is winning, he's less likely to attack Powell or disrupt the Fed's work, at least in the short term. In many ways, this market rally is exactly what Trump needs heading into an election season. It supports his campaign narrative, lifts investor confidence, and allows him to pivot from confrontation to celebration. The question now is, can this rally continue? And what happens if the Fed changes course again? So why is Donald Trump suddenly softening his stance on Jerome Powell, the very man he once blamed for wrecking the economy? One word: strategy. Trump knows that any sign of economic turmoil could hurt his image, especially with an election looming. While he's never been shy about making bold threats, firing a sitting Federal Reserve chair would almost certainly trigger market panic and investor uncertainty. And right now, that's the last thing he wants. Instead, the former president is repositioning himself as the steward of America's economic recovery. He's aware that the average voter sees the stock market as a barometer of success. If the Dow is climbing, confidence in leadership goes up too. In that context, attacking Powell while markets are thriving would be politically self-defeating. Behind the scenes, there's also pressure from Trump's own advisors and donors. Many on Wall Street, even those who support him, have warned that destabilizing the Fed could cause long-term damage. They want predictability, not drama. And in 2025, predictability means leaving Powell in place. Plus, Powell's policies might actually be working in Trump's favor. With inflation slowing and the possibility of rate cuts emerging, the economy could gain even more momentum, something Trump would be quick to claim credit for. So, in classic Trump fashion, he's recalibrating. The fiery rhetoric is on pause, for now. But make no mistake, if markets dip or Powell makes a move Trump doesn't like, the gloves could come off again. For the moment, though, silence is strategy. With Trump dialing down the heat, Jerome Powell's position as Fed chair appears safe, for now. But that doesn't mean the pressure is gone. Powell's term runs until 2026, and while the Federal Reserve is meant to operate independently of politics, no Fed chair is completely immune from presidential influence, especially when that president is Donald Trump. The recent change in tone may have bought Powell some breathing room, but it's more of a tactical pause than a permanent truce. In the short term, Powell's focus will remain on managing inflation without stalling the recovery. If he can continue to steer the economy towards stability with low inflation, steady growth, and strong employment, he'll likely avoid further confrontation. The markets support him, economists respect him, and his data-driven approach has earned cautious praise from both sides of the aisle. But if the Fed starts raising rates again, or if inflation rebounds, Trump could once again turn him into a political scapegoat. The risk is always there. Powell's past resistance to political interference might make him a target if Trump returns to the White House with an even stronger mandate. Still, this current truce signals something important: the power of the markets to shape political behavior. Trump, who thrives on market success, knows better than to shake the financial tree when it's bearing fruit. And Powell, for his part, remains focused on his role, cool-headed and committed to stability. In the eyes of Wall Street and the global financial community, this moment reinforces the Fed's resilience. But the next policy move, the next rate decision, or the next Trump outburst could change the story in a heartbeat. Trump's pivot on Powell isn't just a personal or political move. It's part of a larger narrative he's trying to build as he eyes a return to power. In 2025, with the campaign season heating up, Trump is reframing his economic legacy. He wants voters to remember the stock market highs, the tax cuts, and the America First growth years, not the threats, the volatility, or the pandemic-era uncertainty. By backing off Powell, Trump is sending a clear message. He's the leader who gets results, even if it means working with people he once criticized. It's a classic Trump maneuver, turning a reversal into a sign of strength, not weakness. The booming market becomes the proof that under Trump's influence the economy performs. And if it's working, why pick a fight? This shift also opens up new messaging for his campaign. He can now talk about stability and results without having to defend chaos. He's positioning himself as a pragmatist who knows when to fight and when to step back, an image that appeals to voters who are weary of conflict but still trust his economic instincts. Of course, this could all change with one tweet or one economic downturn. Trump is unpredictable, and his relationship with the Fed has always been conditional. But for now, he's embracing the boom and using it as fuel for his comeback narrative. In the world of politics and finance, timing is everything. And right now, with Wall Street smiling, Trump is playing the long game. crafting a storyline where even a former enemy like Powell becomes part of the bigger picture. Trump, the economic commander, back in charge.